Hey guys, welcome back. In today's video, we are talking about AMC outperforming, the fake squeeze, the AMC exit price, and many more in this video. Firstly, we're taking a look at this. So over these past few days, what happened was we saw a news that said Wedbush upgrades AMC Entertainment to outperform, raise its price target to $4. Now, before we get excited, we've always known that AMC is undervalued. And for me, this piece of news isn't something that is showing that finally we're getting the recognition. Yes, we are now seeing how these institutions realize AMC needs to go higher. They're going back on the words before of AMC is going bankrupt, of AMC should be a 70-cent stock, of how you should sell your AMC as we see them change these price targets. Now, of course, still, we have to realize they're still undervaluing us when they raise the price target to $4, because we know that when we exclude the squeeze price, even looking at the market sentiment, the fundamentals of AMC, we know that we should be way higher than that. And so this isn't suddenly saying that institutions finally realize, because the ones who have realized the potential of AMC has been accumulating. We've always shown that they have always been secretly accumulating. But now it's showing a pivot in how they can't keep saying AMC is a bankrupt company, and they're trying to throw these targets to throw people off, because despite the fact we are seeing price targets of AMC to $4, you can still see this. We're still seeing these articles, despite the fact that this was during AMC up 10%, AMC closed the day of, or closed the week of, at up 11%. We're still seeing these articles saying market headlines, AMC Entertainment is facing significant challenges, including a struggling recovery post-pandemic and a high debt load. Despite a recent surge in stock price driven by a strong movie lineup, analysts express caution about its long-term profitability. And so, despite the fact that AMC was up 10%, we're still seeing these articles. Now, what's even crazy about this article is the things that they've talked about here, including a struggling recovery. Well, again, when we take a look at the fundamentals of AMC and we take a look at the whole macro factor as well of the box office, we're seeing box office going up. We're seeing how AMC is making record revenues like they've never done before in the past. We talked about the June EBITDA. We talked about all these other things that AMC has done, and the fact they talked about the high debt load as well. Despite the fact AMC recently restructured their debt, they've got rid of some of the high interest payment. They're allowing AMC to actually gain more of their revenue for profit because of decreasing the high debt payments, the high interest payments. You can see how these articles are constantly trying to attack AMC. And so, whilst they talked about the struggling recovery, they talked about the high debt load, they haven't talked about what AMC has done to actually combat it and actually see how AMC is not facing those problems. Now, what they can admit is despite a recent surge in stock price driven by a strong movie lineup, and I think that's very important because AMC is up 11%, but that isn't because Wedbush suddenly gave AMC a price target of $4. When you take a look at the sentiment of AMC, you can see that it's extremely bullish. And I want to talk about how we're getting these articles anchored of AMC's jumps off the Wedbush upgrade despite broader market weakness, is that it is not because of these price targets. When you see these analysts gives other companies price target, you don't see them suddenly jump up 10% in a day. At least not with just where they were previously sitting at $3 and then given a price target of $4. You will see them jump up 10% if it was 50%, if it was 60% above the current market price, not where we are at right now. But not only that, it's about seeing that the investors of AMC, the apes of AMC more importantly, has always been bullish on AMC. They have constantly been buying. Now, when you take a look at the institutions, yes, we are at a 50-50. Now, when I say 50-50, I mean the shorts who have always been shorting AMC, they're always going to short. They're not going to change their positions, or at least they're not going to change it to net long on AMC. That's because they can't. No matter what they do, they've already created billions of synthetics, which they still have to cover. now in which they are trapped in, and they can't buy back billions of shares of AMC, at least not right now, because the retails hold on to that. And when you take a look at the other side of the institutions, the ones who has been accumulating, they've always been secretly accumulating. We've seen how institutional ownership of AMC has been going up, and so we know that they're always being bullish. Now, the only difference is that sometimes we see companies like Goldman Sachs who sell their put positions, who decrease some of their known short positions, and then go long on AMC. And so that's them trying to obviously recover any losses, well, at least trying their best. And so that's the only side you'll see when shorts are flipping long. But bear in mind, they are still net short. When you take a look at the fact they're constantly spoofing, when you see the fact that they have already created billions of synthetics, you know that they are net short. But it's just that on paper, what they're showing to the public is that it's looking like they are long. But the most important thing is that AMC going up 11% in a day isn't done because of a sudden price target given by Wedbush. It's because the apes investors has never sold their shares despite what they're faced with. When we're faced with all of these manipulations, when we're faced with these tokenizations, when we're faced with the FUD, when we're faced with all of these FTD, synthetics, etc., we never faltered, we never sold. We've constantly been buying, and that's why we are able to see AMC do these 11% days. That's because of the fact that the real value is so much higher. And you have to realize apes will not fall for any kind of a fake squeeze. So just forget about it. We know what we own. The tricksters of the short selling community need to be taught a lesson they will never forget, and Ape Nation are more than capable of delivering the harsh lessons. And then this is not to say that we are up 11% and suddenly we are facing a squeeze. Of course not. That's not what I'm talking about. But in our previous videos, and in fact, I think it is literally the video before this, we literally talked about how shorts will try to give a fake price for AMC, how they try to give a fake squeeze price by putting up $100, by putting up $200. Now, this isn't to say, and as always, I don't try and make you not sell or sell at any price. I've always said, none of this is ever financial advice, so do take away a second of salt, make sure you do your own due diligence and research. But it's about understanding the fact is that they are willing to buy back at AMC at $100 per shares, despite however much they will lose, because they understand is that if they can't buy it back at 100, they'll have to buy it back at 1,000. They'll have to buy it at 10,000. And so if they are able to offer out $100, even though that's not what they even want to do, they want to buy back AMC at $1. In fact, they want AMC to go bankrupt, but they don't know that. They know that that can't be possible. And so they are trying to, offer these prices like $100. And you can see AMC price moving slightly up today has nothing to do with the Wedbush analyst price increase. These are cracks in the short fortress to keep AMC down. The dam will break. MOAS is coming bigger and stronger than ever seen before. We are not fooled by a fake squeeze to a couple $100 per shares. We are never leaving. And so that's the important thing. It's about understanding how they are trying to obviously give this fake image of AMC squeeze is at $300. This is the squeeze. Everyone should sell. Everyone should leave. Now, I've always said when the squeeze comes, the institutions, the shorts, they will not have the ability to set the price. They are in desperate need of shares by then. And so we have the ability to sell at the price that we want. Now, once again, if you want to sell at 300, if you want to sell at 400, if you want to sell at 500, if you even want to sell 100, that's of course entirely up to you. But I'm talking about when they have to buy back the billions of synthetics at that point. We have the ability. Yes, you can sell 1,000 shares, but 1,000 shares isn't going to cover the billions of shares that they've created. And that's what we've talked about. Because they've created the billions of shares, they rather buy back $100 than at $1,000, than at $10,000. And again, they obviously want to buy it back at $1, at 10 cents, but they obviously don't have the ability to do so. And so this is what we said with recently, they're trying to create these, incentives of saying that, AMC's price target is $4. So when AMC reaches $4, you should sell because it's already out exceeded, the price targets. That's obviously not the case. In my opinion, I do believe AMC, excluding squeeze, just looking at what will happen if we were to see real price discovery, I'm already talking about in the hundreds. And it's why I'm saying it's very important to realize what the shorts are trying to do. And this is the effect our investors have when we buy the float. We force shorters to extend their risk, we're forcing shorters to increase their collaterals, and we're forcing hedge funds to compete for shares they need to close their short positions. Now, the important thing here I want to talk about is compete. And it's why I talked about why we have the ability, because when they have to buy the shares, remember, this isn't just one short seller. These are multiple short sellers. And when they buy back these shares, they obviously want to buy it at the lowest possible. If they know that AMC is going to go to $10,000, going to go to $100,000 per shares, then think about it. If you were in their shoes, you will want to compete against other short sellers to buy it as quick and as cheaply as possible, whether that's $100, whether that's $300, or whether that's $1,000. Because in retrospective, when you're comparing it with 10,000 with 100,000 per share, you're obviously losing less if you were to buy at 100, if you were to buy at 500, if you were to buy at 1,000. But then that's exactly what we talk about. If they have to compete, then we have the ability to set the price. And you can see $720,000 per AMC share is my exit price. And even then, as soon as it cools a bit, I'm buying wherever I sell back again with even more shares. This is a lifetime play for me. And let's just talk about the ability that we have. Once again, you set your own price. I'm not telling you whether, what the price is right. Whatever you think is life-changing for you, whatever you think is right, is the price you should set. But I'm just highlighting the fact that I personally believe that we have that edge when it comes to it, and we have the ability to set it at a price so high that it will cause so many hedge funds to obviously go bankrupt. But yeah, guys, thanks for watching this video. I'll catch you guys next time.